Just like the last example, we see common characteristics of higher volatility during steeper portions of a trend that eventually have a noticeable contraction. In this case, since there's a contraction and price goes mostly neutral to slightly bearish, a continuation to the ongoing uptrend becomes more likely once the bands begin to expand. Essentially, these are the classic characteristics for continuation potential. They are repeating again here. Since we're in the context of an ongoing uptrend, we'll be looking for a spike of bullish volatility, which will take the form of price rising towards the upper band, which is also the upper boundary of this relatively horizontal and narrow price range. What we look for with the Bollinger Bands is consistent contact with the upper band, while the area of the Bollinger Bands expands to indicate higher bullish volatility, which is often the result of increased buying volume that produces rows of larger green candles. But of course, this can't be sustained indefinitely, so bullish volatility eventually decreases, and that takes the form of the Bollinger Bands contracting into flatter ranges. Let's take a look at this from a bearish perspective, where it's essentially the same thing in reverse. After a steep portion of the downtrend, there's an obvious contraction of the Bollinger Bands, thus a bearish continuation will look for a return to increased bearish volatility that sees the Bollinger Bands rapidly expand as price maintains firm contact around the lower band. Bullish retracements like this are natural, but we don't want them to close back over the lower boundary of the previous horizontal range that took place just before the volatility expansion occurred. The wider expanse of the Bollinger Bands is maintained as bearish volatility is maintained. Volatility in this case mostly refers to the steeper and faster portion of the drop that initiates the continuation. Recently, the downtrend is still being maintained. It's a steady drop with consistent contact at the lower band, and that means price is more stable and less volatile, which results in the bands not being as wide as before. And that's part of the constant shift on the chart between lower and higher volatility, wider and narrower Bollinger Bands, the contrast between steep trends and flatter price ranges.